My question to you is, how bad might it get?
Boy, Mandy, that's a loaded question. Great to see you this morning. Thank you for having me. Um, it's unknowable right now, and this is really the problem. I do think what's driving a lot of this is unwinding of a few giant trades. The carry trade being the first among equals because that's permeated all levels of the financial economy. People borrowing money in yen to invest elsewhere. Another big portion of the trade, which I do think the second portion got kind of washed out, was people who been shorting volatility because they thought volatility was dead. Volatility never dies. It can go into long periods of sleep, but it always comes back to haunt you at the worst times. So it's tough to say how it unwinds. There's a few things I'm watching. It's really going to be, how does the yen act? How does the Topix Bank Index act vis-a-vis the Nikkei and the Topix main indices? And just, can U.S. investors sort of get out of their own way? Because are we projecting a recession because we had a few bad days in the market, or are we projecting a recession because we're really starting to get the economic numbers? They're certainly tipping over, but I don't think they've tipped yet, and that's really one of the keys.
Steve, so now that we're learning about the extent of that epic leverage that had been built up in the yen carry trade that you refer to, are we perhaps not, did we not give enough credit to the carry trade in the rally that we've seen over the past 18 months?
We've given it too much credit, but that's a turn of a phrase, of course. It's certainly been helping to propel things. It's sort of unknowable. I've been trying my darndest to get good estimates on how much money could have been spent in this, but it's really kind of impossible because you don't know how much. You could look at all the money that's been borrowed in yen, but that's not necessarily telling of any sort of thing. But it's been such a layup, right? When you think about it, the yen, the Bank of Japan has been keeping rates of zero essentially forever until last week. And so it also put pressure on the currency as the other central banks raised rates because it started to lose on the rate differential. So if you started borrowing yen at about 110 to the dollar and you continued borrowing yen steadily from up to about 160 on the dollar, those positions can be enormous. And with that is why I think we saw such a nasty reaction in the Nikkei itself, and in the U.S. momentum-based stocks, which I think is where a lot of the money went.